Hey, it's Mike over at Cross Country Mortgage. Good morning. It's time for your Monday morning mortgage update for the week of May the 19th. Hope you all had a wonderful weekend. I always try to give you some insight about what's going to happen in the mortgage market, real estate market moving forward, and give you some insight about why the market is what it is based on last week, based on what's going to happen this week. And when you're out there making decisions to buy and sell properties, hopefully this gives you some insight about making those right choices. So, what happened last week? We saw a sell-off in the bond market. Money moved out of the bond market, which means rates got slightly higher. If we look at this graph, it's a 6-month representation of the trading of mortgage-backed securities in the bond market. This is where mortgage rates are determined by the trading of these securities in the bond market, nothing else. This is where lenders look every single day to determine where they're going to price their rates, the rates they're going to offer their clients on a daily basis, on a minute-by-minute basis. And this market changes all the time. So when we see this graph go up and we see these red candlesticks, which represent one day of trading, that means money's flowing into the bond market and mortgage rates are going down. When we see the red and the graphs going down, that means money's flowing out of the bond market and mortgage rates are going up. So we saw last week on the right-hand side here that we saw a little sell-off on the market. It wasn't a big sell-off. I mean, we really look at the volatility in between, but it ended on Friday just 34 basis points down, sell-off, than it started on Monday. So basically, we saw a slight increase in rates, but really not that much, even though there's a ton of volatility. Today, if you look at the green candlestick here, you think, hey, that's great, we got better pricing, but look where we started. We started way down. We haven't seen this level of pricing since April of last month, a month ago. So not starting great, but let's talk about what happened last week. We basically saw retail sales were weak. That means consumers aren't buying things. Now that's a weaker economy is a strength for rates, but we just saw inflation, consumer sentiment. There's reports that come out of what do the consumers think are happening? And a majority of the consumers think inflation is going to get worse. Why is that a big deal? Because if they think it's going to get worse, it kind of becomes a self-fulfilling prophecy. They spend less, and it just kind of snowballs from there. So the market took this very seriously, and investors pulled their money out of the bond market because inflation is the death of mortgage rates. Higher inflation, rates go up. Consumer sentiment, again, said that inflation was going to be up. And then we saw inflationary numbers come out last week, and they were unchanged. So we'd love to have seen that inflation number go down, but they were unchanged. So hey, it is what it is. So what are we looking at this week? It's actually a short week because of Memorial Day weekend. So the market's going to be closed on Thursday afternoon. Nobody's there Friday. Nobody's there Monday. So it's a long weekend. And not a lot of stuff's happening this week economically that's really going to move the needle on interest rates. We may see some people park their money in the bond market before they leave for the long weekend as a flight to safety. But again, nothing really is going to move the market. We're looking at a couple things, geopolitical, a lot of things happening there, and some other stuff. So what's geopolitical? The big, beautiful budget bill that we all hear about in the news, it's still in the Senate, has to go to the House to get approved. And the bond traders, and this is what we talk about, what do the bond traders think of this, is how is it going to impact the deficit and inflation? Those are the two things that they're thinking about. So if people are going to stick their money in the bond market, that big, beautiful bill, deficit and inflation. If it raises our deficit, not good for our economy. If it increases inflation, not good for our economy. So the one thing that a lot of people are paying attention to is the Trump tax cuts that he put into place the last time he was in office. Are they going to expire? They're scheduled to expire. Are they going to be extended? Is the Senate and the House going to approve that? We're just going to have to wait. Probably won't get an answer this week, but news that comes out on this could impact the market. Tariff news, look, any tariff news is going to move the market. We really are trying to see, are there any countries, India and the like, that are actually going to agree to some tariff news this week? Highly unlikely, but we'll be paying attention to that. And then, interesting, Moody's downgraded the U.S. debt. They downgraded our standing, and we sell debt every month to raise money. The Treasury sells debt in bonds and notes. And if people don't buy our debt, then they're not putting money in the bond market, and that's not good for mortgage rates. So that downgrade to the Moody's debt really is what moved the market today to start off lower because they came out with that rating over the weekend. Other things, the Bank of China is having their Fed fund meeting this week. They expect to cut rates. China's economy is really getting thrashed because they're not shipping anything to the U.S. and we're their number one consumer, and their ships aren't even delivering things. So this tariff war is really having an impact on their economy. And then stagflation. Stagflation is recession at the same time there's inflation, and typically we have one or the other. And if we have both, it's called stagflation, and that's really not good. And that we've been talking about this for a while. It's been on the kind of the second tier of news, but it's starting to gain some speed. We're starting to see some signs that maybe we could be in a stagflationary market moving forward, and that's just not good for our economy, not good for rates. So what are we doing this week? We're starting the week floating. We don't expect really any movement to rates. It's probably going to be a flat week unless there's some unknown huge news out there. So have a great productive week. Enjoy your long Memorial Day weekend. I hope you spend time with family and really remember why we have this weekend. And we'll talk to you next week. Bye-bye.